Good afternoon, Ashutosh. Let me first start off with your take on Axis's numbers. What is your assessment, and do you believe that the worst is now penciled in, or do you believe valuations are cheap, or do you believe that you would want to stay away from this one?
So we can say that worst is almost priced in. Like if you look at the commentary and intention of the management, it does not look that they have guided this in the fourth quarter that they are doing some review and the result is out in this. Normally, first quarter is also weak quarter for the banks in the terms of that they recognize the agri NPA, especially the larger bank who have a substantial higher agri portfolio. So there also we see some pressure comes into this segment. But in my view, probably second quarter onward, we are going to see a transmission impact, especially on the deposit front, to start getting reflected, and that's where the things will start playing out. And even CRR impact will be there in the third quarter part of it. So from the perspective, if you look, the worst is behind us for the Axis Bank, in my view. Whether things will improve very quickly, I have my own doubt on this part of it, because we have seen that last year also growth was lagging. If they are not able to catch up on the growth, then probably this year also will be washed out, and then we will look for FY27. But if they were to deliver the growth going forward from here, then things may be looking good for them.
Okay, all right. Ashutosh, what's your take with regard to this technical write-off they've taken? Would it worry you at a time like this, and especially at a time when we've seen what's happened to an IndusInd, and maybe I'm in nowhere alluding that it's the same case, but would it at all worry you?
No, it's not a matter of worry, but only thing is that it need to be communicated much more clearly in advance, which was lacking in that terms. So there we can question management on that part of it. That if they were doing these type of deep internal audit or internal system change for certain segment of the loan, they should have communicated to the investor in advance in a much more clearer way, rather than just as a passing remark in the fourth quarter commentary.
Ashutosh, the other question that will be in the minds of the people might be that if I'm not saying they will show a similar one, but if there are some chinks in the armor of HDFC and ICICI as well, could that make people move in a sizable way from banks to NBFCs, even if they want to stay within the BFSI space, or alternatively reduce exposure to banks to some other sectors, if you will?
So our house call was ideally from the last 2 months about that, going more long on NBFC and reducing weight on the bank. Simple reason was that if you see the historical high of the bank's names in the last 2 years, it was happened because of the rate hike. When the rate reversal cycle has started, there will be impact on the banks, and we all know that will get reflected over the next 2 quarters, or 2 to 3 quarters going forward from here. So in that way, still NBFCs looks to me much better than the larger bank bet. Where we are more positive on the bank side is the smaller banks, because there they have much higher term deposit contribution, and the term deposit rate has come down substantially. So they were the larger benefit of this whole rate cut cycle and liquidity flush in the system, rather than the larger bank out. So my view is very clear that prefer smaller banks with non-MFI exposure type of thing, and then we can prefer NBFCs over the larger bank.
Okay. And so what? Can I ask you, and we'll talk about NBFCs, but can I ask you, what's your pecking order when it comes to the smaller banks? Because there are people who've bought into the small finance bank and others. I mean, is there a pecking order that you have there?
So we prefer the bank where have a less microfinance exposure. So if you see the business numbers of CSB, Karur Vysya, South Indian Bank, these banks are doing quite well in that pack. So in my view, these banks can do quite well going forward from here.
Okay, the other two that will come out with numbers, and we discussed those, we just touched upon those with Ashutosh, was an HDFC. Well, flat on the net interest income is what HDFC is penciling in, or rather analysts on the street are penciling in with regard to an HDFC. Operating profit also expected to be largely flat, just about up 1% or thereabouts. Provisions will also hold in in what is supposed to be a tough quarter, especially where agri is concerned. Some of those numbers are on your screen. Those are provisional numbers already disclosed by an HDFC bank. But profitability to hold up when you're looking at it sequentially. Ashutosh, do you, a material inch up in margins not expected, of course, this quarter, but would you then say that there could be any inch down in margins? Because HDFC did see an inch up in margins in Q4. Do you think they'll give away that inch up, if at all?
Surely they will give away some of the margins which we have seen in the fourth quarter. And a peculiar case where the difference between HDFC and ICICI will be there that HDFC has just changed or relinked their HDFC Limited loan books to the EBLR linked loan in the recent past. So they have, in my view, have taken much better linkage terms and conditions compared to many other banks with their EBLR linked portfolio. So HDFC and compared to ICICI, probably HDFC will see a relatively lower compression in the NIMs compared to ICICI Bank, in my view.
But Ashutosh, that's unfair because ICICI is also on a higher base. So how much of an inch down are you expecting on an ICICI? And if I can venture, what's the take on Kotak as well? Because those numbers will get benchmarked to Kotak's numbers.
So even these three, if I just compare the three banks which you named, I will say the Kotak will be giving one of the good result in the followed by the HDFC and then ICICI Bank.
Okay, I'm just.
But all three, I don't expect any negative surprise on asset quality or as such any of these three banks out there. Main focus will be on a growth and NIMs territory going forward from here.
Got it. I'm moving tracks a little bit, Ashutosh, because I'm coming to the top of the number 2 in your pecking order, which is NBFCs, and just trying to understand whether out here also, do you prefer the mid-size ones over the large-size ones, or because the cycle might just be starting after what the RBI has done, that people might prefer the larger ones, they might be the first ones off the block and gain more?
So I will prefer the mid-size one again here.
Why
a
so?
larger one is so larger one still have a valuation wise at much higher level. So it's more of a valuation call rather than the business call.
Okay, and what is it that you like in the mid-size NBFCs?
So if you look at we still like Poonawalla and we like Sriram, although in the commercial vehicle segment, we expect some asset quality pressure to come in. Probably from here to next quarter, we are going to see some more positive traction in coming in. But Poonawalla is the one which I can name from that we like at this point of time.
Okay, Ashutosh, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.